We should look at quantum computing stocks. They are speeding to gains right now. We're talking about D-Wave, Rigetti, IonQ. D-Wave up 14%, IonQ up 7%, Rigetti up 10%. This on a Wall Street Journal report that the Trump White House is looking to take equity stakes in quantum companies, which it sees as a critical segment of the economy. Interesting. So we're watching that. But IBM is the one that planted its flag on quantum computing long ago. Fascinating move in IBM shares today. OK, right now down 1.6%. But at the open, the stock tanked 6%, not because of any problem with its quantum business that's enjoying torrid expansion, but due to a third quarter slowdown in its Red Hat, or also known the hybrid cloud segment. I spoke with CEO Arvind Krishna about the quarter-over-quarter decrease of Red Hat, 2% or so. He told me he's unconcerned about it, said he expects it to restart growth, and that it was more than counterbalanced by his AI book of business, which jumped 12% to $9.4 billion. I mean, clearly, investors realize that the situation is not as bad as initially thought. The stock has pared much of those losses. Arvind also told me that the rise of AI does not blank out the need for computer science majors he wants to hire. IBM's gorge hiring computer science majors. He said, if our rivals choose not to hire them, Liz, we'll take them all. All right, folks, the show is jam-packed with Tesla earnings news. Oil prices are gushing higher. The market is on the edge of its seat ahead of tomorrow's long-delayed release of September consumer inflation. So let's go to the floor of the CBOE, the Chicago Board Options Exchange, where options traders are betting on all of it. Prosper Academy's Scott Bauer, one of the most experienced of them all. Scott, we can't forget about earnings. Intel and Ford are among those that have to report after the bell. I mean, and yesterday's sell-off notwithstanding, the market seems to like what it sees. The majors are all up week to date. What is the trade you see? Because the season for earnings is just starting to heat up.
The trade is actually pretty optimistic, Liz, and I would say that even with, earlier this morning when, the markets were kind of whatever, and then we got the news from President Trump or from the administration that they are going to meet with China, and we saw the market take off. The trade today has been pretty optimistic, almost like IBM, what happened with IBM today. It's vastly, vastly different from earlier in the week and from last week when we saw that VIX hit a two-handle, over 20, and all of a sudden, retail came in and was buying all sorts of upside VIX calls. But it is very optimistic now. I would say it's cautiously optimistic, but very, very optimistic. And, some of the negative results or, negative, prints that we have seen from Tesla earlier, which turned around, Netflix, which is still down. You had IBM, which turned around, Texas Instruments. I don't think that really lays the landscape for what we're going to see next week. Next week is really going to be the tell-all for this earnings season.
And what about tomorrow? CPI, Consumer Price Index. This thing, people have been waiting for this now kind of old data release. It's from September, gives us an indication of inflation at the consumer level. Scott, inflation's still sticky. Year over year, it's expected to come in at a rate of 3.1%. Core, estimates. And then core is, here we go, 3.1% as well. So are you seeing bets and trades made here?
It's been really sticky. It's been really sticky, and I think the print tomorrow, there's going to be a lot of caveats to that, because regardless of which side that it's on, whether it's hotter, whether it's cooler, there's going to be a lot of talk how, well, this is really old data. Can we trust the data? So it might, be just a little bit of what the Fed is looking at for next week, but I don't think it's going to have as much of an impact on the market as if it was during a normal cycle when we were just getting normal reports.
Yeah, I'm looking at Fed funds futures, still 99% odds of a rate cut next Wednesday to be announced. This is something that many investors watch because businesses also need to borrow money, particularly the small and mid caps. Russell 2000 has suddenly started to perk its head up, really kind of hitting a couple of records over the past several weeks. Are you seeing increased bets there?
Yes, in fact, it's really interesting because the Russell, out of all of the majors, including the S&Ps, the NASDAQ, and the Dow, the Russell, there's been the highest amount of call buying over the last couple of weeks. Even with the pullback, even with the drawdown that we've seen, the concentration of call buying in the Russell has been the heaviest. So the expectations for not only a cut next week, but December also, which are well into the 90%, that is definitely being reflected in those small cap stocks.
Yeah, and we still have Treasury yields on the move. Actually, today, earlier, the first time we saw in a couple of days, the yields moved slightly higher. 10-year yield came up off the lower parts of it, I guess, at a one-year low there. And volatility seems to be calming down a bit with the volatility index. Yeah, we've got the 3.998% yield on the 10-year.
Yep.
So, again, we're watching CPI tomorrow. We're watching big earnings names next week. And, of course, the Federal Reserve. Scott, thanks for keeping us on pace for all of it.
Thanks, Liz.